Good morning, traders. This is an update on my swing trade with SPXL. If you're not aware, that is a 3 times leveraged ETF that tracks the S&P 500. If the S&P 500 goes up 1%, SPXL goes up 3%. But likewise, if the S&P goes down 1%, SPXL goes down 3%. So there's added risk there. And if you watched my previous video on my update, you know that I got back into a swing on the 21st and I kind of botched the entry, meaning that I took on more share size than I should have because I made the plan ahead of time and the market wasn't even closed when I was making my plan, and I kind of assumed that SPXL hit the bottom of the day and I made my plan based around that, and SPXL went lower, which means my risk went up on the next day. So what I ended up doing was I sold off one share to bring my risk back down to the desired amount, instead of just saying, oh, well, I messed up, let me just keep all of my shares in there and hope for the best. That's just not a good habit to get into, even though in this case it would have worked out because the stock did, or the ETF did go up, but we don't know that for sure. So what I decided to do to mitigate the risk, you can see here where SPXL, I bought 4 shares. That was based on the previous win that I had. I wanted to only risk approximately half of my winnings. So you can kind of see some of my planned stuff here for the swing trade. So this is my previous trade here on the 21st of June was when I started it. Got out on July 19th, and we made about $20 off of that trade, and I did not want to risk more than about 50 to 60% of those winnings. That way, if this was the one time that it goes back down and stops me out, that I don't lose all of my previous gains. So you could see here right now my first day potential loss is $10.80 with those 3 shares. But when I had 4 shares, I can show you right now, the potential loss on the first day was $14.40, so that would eat away quite a bit, about 70% of those profits. So I was not comfortable with that, regardless of how likely it was for the SPXL to bounce. So I reduced my share size. I can show you that order. So there's where I bought 4 shares, and on the same day I sold 1 share. So when I bought it, the price was at 105.24, and when I sold that one single share, it was 108.66. So I made a little over $3 on that mistake, which is just kind of luck, but I'll show you how I kind of turned that into a day trade and how I followed the chart up throughout the day with some strategy. So let's take a look at the chart now, and we'll go back to the 21st. So this is the day that I entered right here on this candle. I entered for the break of this candle, and we'll see. Actually, it was on the 20th, it looks like. Not the 21st. Okay, so let's go to the 5-minute chart, and we'll go back to the 20th, and I'll show you how I kind of scaled out of that trade, I guess, if you will, with that 1 share. Okay, so here's where we were triggered to get in. Once I realized that I had one too many shares, I decided, okay, let me sell out. If I got triggered and the price started to come down against me immediately, I would have sold that 1 share at a loss and would have been happy to take that off the table and reduce my risk for the rest of the trade. But since the price was going up, I decided, well, why not turn it into a day trade? And I believe, this pullback had just formed, so I just moved my stop. I put in a stop order for 1 single share like this: sell, order type, stop, 1 share, and then you hit sell, and you'll see an order pop up. Well, let me be a little bit more specific about that. So let's say the price was around 106.15, then I probably put it in around my entry, 105.26, and then I just would grab the bubble and drag it up where I want it to be. So I would follow these little support areas on the 5-minute chart. So there was a support area here, so I brought the stop up to this level, maybe 1 cent below. I watched the price move up here. I kept my stop here. I waited for another support level, not only to form, but to be broken, to not the support level to be broken, but then the resistance to be broken, because as the price is moving up, this becomes a resistance area right here. Then you get a pullback. This becomes support only when new highs are made. You don't know if it's going to be support until it makes new highs. So once we break out of that resistance, then now this is a confirmed support area. So I just move my stop up to that level. and then I watch the price continue to go higher. Again, I wait for the pullback. I keep my stop here during the pullback. I wait for this new area of resistance to be broken. Once that's broken, then I move my stop up here. And again, the price goes higher. And I think I just left it here during this pullback. Actually, no, I did. I was debating on that, and I think I kind of decided to call this an area of support. This is a little bit of choppy price action, but as soon as this high was broken, it did become support. So I moved my stop up to that level. And okay, yeah, so this one was good when I moved my stop up here, but then I kind of continued that trend here. And I still think this was an okay trade, because even though it's starting to get kind of like microscopic pullbacks here, you could definitely still be okay to call this an area of resistance. And this becomes a new support right here once this high is broken. So I moved my stop loss up there, and then I got filled on this flush down here. So yes, it did go a little bit higher, but that was the way that I played that trade, and I think that was a decent way to scale out for some profit on that one single share that I did not even want to have in the trade. But now I already knew that I wasn't going to lose money on it, so why not make the most of it? And that's what I did. So we already made, like $3 and change off of that trade, but I'm not going to count that on the spreadsheet here. I'm just going to take this as a 3-share trade, because that's going to kind of inflate the P&L if I add that in, and it was really based off of a mistake. So that P&L is really not part of the swing trade, that sell of that one share. That was a separate thing. I'm not going to track it on any spreadsheet anywhere. It's just going to be added into the account and just be a little cushion, I guess. So anyway, that is what happened with that one single share. So let's see how the swing trade is going. And I know I got some comments, and I get it. I understand completely. And believe me, I have those same exact thoughts. Like I was in the trade back here. I got in for this break, and I followed this price action up by following the 50 MA with my stop loss, and then I got stopped out here. And some people say, well, why don't you just let it bounce, or why don't you just add more on the bounce? No one knows it's going to bounce until it already bounced, right? So nobody can tell the future. And then, you get people, and again, I get it. It's true. You're not wrong. That saying that it always bounces off the 50 MA. Now that statement is wrong. It doesn't always bounce off the 50 MA. It often bounces off the 50 MA, and that's why I trade it that way. That's exactly what the plan is here. But it doesn't always work. I mean, look back here. It comes down, it touches the 50 MA, it breaks the high of this daily candle. That would have triggered an entry for me, and then I would have got stopped out for a loss right here. Okay, so, and then, yeah, it did bounce later, but you don't know. This is a weak move, and it could be the sign of a reversal. And then if you go further back on the chart, there's a couple of other entries like that where I would have gotten in for the break here. I would have made a little profit off of this one. And I believe I did trade those moves on the SPLG. If you were watching my videos from months ago when I was doing this on Chase, SPLG is basically the same thing as SPXL without the leverage. And same thing back here. If you get in for the break of this candle, maybe a small win there. And then this was a really nice move. This is kind of what inspired this plan to begin with, was how, it came down, fell below the 50 MA, it breaks above it, and it holds above the 50 MA for a very long time. But the further back you go, you see that it doesn't always come down, touch to the 50 MA, and then take off for some new high. It can come back down and go below it. Here's another, well, this one didn't touch. Let's see. Here's another one where it's trading around the 50 MA. This one doesn't kind of make any sense because this was after the pandemic crash. So, and this can happen, right? This can happen again. Just because, this happened during the pandemic doesn't mean it'll never happen again, right? If it happened before, it can happen again. So that's why my strategy is to sell when it touches the 50 MA again. That way I can avoid some crash that may be coming and may not be coming. I'm sure eventually there will be another crash. We just don't know when. So no one predicted the pandemic crash, and it came. So we don't know when the next one's going to come. And if it does, I'll be ready because I'll have my stop loss at the 50 MA. And that's the idea. So anyway, this is the plan. If you want to see the plan, and you could see that my original stop loss was for the low of this candle, 101.66. That only lasts for the first day. As long as the price closes above the 50 MA, then I can bring my price up to the 50 MA. So I'm at maximum risk on the very first day, and then on the next day my risk is greatly reduced typically, and you can see that now I am only risking about $1.50 per share. So the original risk, first day potential loss was $10.80. Right now we're risking $4.50, so we're even less than half of our original risk at this point. And I'm sure at the end of the day I'll be able to bring that stop up quite a bit higher, and we'll get to about a $3 risk, because I will move it in anticipation of Monday, just in case I'm not around at the market open. So anyway, hopefully this video was helpful to you. The main message that I want to get across with these trades is not for necessarily you to do the same thing that I'm doing. Just because it's working for me doesn't mean it's going to work for you. But the one thing that you should be doing that I'm doing is plan every single trade. Plan your trade and then trade your plan. That's kind of a platitude that everyone says, but what does that mean? That means stick to the plan once you've written it, right? So you can see here that I have a lot of details about this plan. This isn't just my plan wasn't, let me jump into SPXL and see if I make some money. You know, it's a very specific plan, and if the plan is broken, or not so much if the plan is broken, but if the trade is broken, if something fails in the trade, then I follow the plan and I get out or do whatever the plan tells me to do. Simple as that. So, you know, in this case, my plan is just to follow the stop. So if the price comes down, or follow that 50 MA, if the price comes down, touches that 50 MA, then the stop gets triggered, and that's it. That's the end of the trade. Simple as that. So, all right. Again, every single trade that you go into, you need to have a plan, and you should stick to it no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.